stock market morning prep video for Wednesday, October 1st. Markets red across the board. We had a little bit of buying going on early in the day, around 10 o'clock. Markets kind of peaked about 11 o'clock and then just kind of started stair-stepping down. We had a little bit of a short covering rally at the end of the day, so well off its lows. But it seems like the buyers or dips here are getting a little tired, and that's what it looks like. What's been happening of late. Dow Jones down 28, Nasdaq down 12.5, S&P down 5.5, and a Russell down 16. And Russell, we're looking at that key area of 108. I'm going to show you some indices, some levels to watch, and a lot of the five that we follow. And it's going to be important here. It's going to really, this October could really pick up on additional volatility here. Now, I want to see some of the indicators wash out before we start looking to really get heavily into buying the dip mode, if you will. I think that we're going to get into a good shorting opportunity before we start looking to buy the dip. And I think for sure October should be pretty volatile. So I want to go into some of the indicators, and I want to show you that there's plenty of room here to the downside. And if we look at the first one, which the bullish percent, SPX, as you can see here, we went on a sell signal in September the 8th. And sure enough, we are moving lower and lower. And this is a very good indicator. A little choppy sometimes, but if you catch it, you'll catch a good move. And we're starting to move lower, as you see the SPX here making lower lows and lower highs here. So we do have bearish formation and bearish symmetry. And we are looking for maybe another little pop if we can. Now, we had mutual fund inflows that come in at the end of the month, but really didn't see that. That was met with some good selling today. Markets really didn't go anywhere. They kind of chopped around, so it was kind of a quiet day. But I would suspect when you unexpect it, you're going to see some movement in the markets, and it happens really fast, so you got to be aware of that, okay? Now, let's take a look at the McClellan Oscillator. Down at the 51%, negative 51%, I'd like to see a big washout down here into that 100, negative 100 area. As you can see, this is where we had big moves back up in the market. If we can get a washout here along the bullish percent, and look at the NYUD, which is the advanced decline with volume, which is something that's really key here. We're in that washout territory. So this is one of the deeper pullbacks that we've had on our indicators here. So, but breadth, as you can see, breadth of the market's really declining, really bad. And we're still holding above here. This is pretty amazing stuff that we're still holding at the upper end of the range. I mean, we're not that far off the highs. Let's take a look at the stocks above the 50-day moving average. As you can see, we still could get into this washout territory of 30 or plus 25, 30. I like to see that down below this line here. And as you can see, every time we did get something in that manner, we just shot right back up again. So let's keep an eye on these indicators, because they will give you a good idea of are we going to flush. And when we do flush, we will get that snapback rally that we're looking for. We can kind of ride that up until when it stops, and then we will reevaluate it. But I do see some further weakness. We only had a few days. We had a couple of big down days. Then we were taken back by some big up days. So the markets really haven't gone anywhere. I mean, closed September with a loss, but we still haven't really pushed dramatically lower, which I do think that there's plenty of room here based on what these indicators are telling me. Okay, so let's go right into the index. Here's the area. We had a lot of people calling 1960 to 63. I could see that. We have the lower end of that channel as support, but really the bottom line is 1955 is going to really be, that's going to be that low from yesterday, 2 days ago. And if we break that low, then I could see us really starting to flush down here, and then taking out that that August low would really be the next, the July low would really be that next key pivotal target here. And that's where we're looking for if we do start to break it down from here. Now, we do have this head and shoulders that we identified last week. Right now, it's working out pretty good. We have lower lows and lower highs. We have bearish symmetry in place. And as you can see here, our moving averages are pointing lower. Target is 1922. So really, you got a little bit of congestion in here. So that 1955 right? That's going to add right around that area here. So that's going to coincide nicely with a little bit of this support here, 55, 58. But we break that tomorrow on a closing basis, we could be off to the races to the downside, okay? Let's take a look at the diamonds, get some key areas here. So the Dow Jones above the 50, it's going to need to take out that 50. And also, I'd like to see that this low, this low right here of 68, 60, let's call it 69, 169. That'll be the low here. Let's take that out along to 50, and then I'll see some further downside. We're going to probably tag that 200 if we do get going. You can see the volume again picking up to the downside, distribution day, and even yesterday, markets were really getting sold into. So let's keep an eye on this. But you can see here, watch these key areas in these indices, because if they start breaking down altogether, well, that's even better. That you're going to have more movement to the downside here. Now here's the 50 again. Here's the IYT, the transports. Now, the transports, they've been holding up pretty much all year. But if you see here, we've got a little bit of a flag pattern here, right? Here's your flagpole. Break below this area here, still clinging to the 50. We take this little bear flag out. We're going to go to this lower trend line, and then of course this low here that will match this low back in June. All right, so let's keep an eye on the transports. It is our leader. Now, the problem child we have is the IWM. And this just is notorious this year for major market divergence. I mean, we do have some intermarket divergence with the IWMs, and 108 is going to be that key level. I don't think it's just going to get down there and just blast right down there. It could, but look at the distribution day it had today yet again. So look at the candles and all of these distributions, higher than expected sell volume. So this is not pretty. And if Hong Kong gets worse, you have all these other conflicts going on in Eastern Europe, Israel. There's nothing good out there. I mean, there's really nothing good out there. Yes, U.S. would be the safe haven. We talked about the dollar. We have Europeans and foreigners coming in and taking their currency, converting into dollars, and that's why the dollar is spiking. That could be one area, or it could just be a safe haven trade. We really don't know as of yet. But dollar up again today, and that's really putting pressure on commodities. But crude oil is looking really good in this area here. Anywhere from 88 to 91. We could get a flush down here, but the bullish percent is extremely oversold, and we could get a real big rip your face off rally here in crude oil. So I'm paying attention to that. And really, there really hasn't been that many great setups. I mean, swing trading is really non-existent. Unless you can really hold it for a long period of time, and it's just non-existent. I mean, and even day trading, the days that we have up 9, down 9, and ES, it just kills a good part of the morning because you're waiting for that setup to happen, All right, so let's take a look at the Qs. Lastly is the Qs. And again, Q's holding up well. Again, we're above the 50. We need to break that 50. That's going to be that tag. And once we get down to that 50, I'm going to say you're going to have to take this low out here. This will be your next spot here. So let's keep an eye on things, guys. Things are starting to heat up here. This IWM is really starting to break down. We have a lot of the key players, some of these high beta names that were running up. Again, the LinkedIns and the Amazons and Baidu, they're all starting to break down. And when you have that, and you have market divergence, and you don't have everything in sync here, you got to pay attention to what's going on because any given moment the market can turn on a dime. And right now, we're kind of teetering. Like today really wasn't a big day, but by watching price action all day, it really didn't look like it was anything great. Now, we had a little bit of buying coming in. We closed well off its lows. That's great, but you know what? We didn't close positive, and that's something that that is really disturbing to me. That I do see some more downside. We'll see what happens for October. If we get a good flush, a good washout in October, that could be setting up for something really good for long trades going into the holiday season. Which obviously, as we all know, we usually get some decent rallies going into the holiday season. However, we had a very strong year last year, and we've had a very big year in 2014. We just made new all-time highs last Friday, 2014 in ES. So for that matter, you have to pay attention, because what happens and what could happen is there is no Santa Claus rally, because we've had it for 2013 and 2014. That could be very possible. So let's not get too ahead of ourselves. Let's take the analysis one step at a time. Have a great day, and we'll speak to you tomorrow. Take care, everybody.